Kathy, thank you. Absolute pleasure.
Oh, my pleasure.
To
Thank
have some
you,
time
Neil.
with you today.
Yeah.
So as you know, moomoo and its sister company have 24 million users globally. We put out to our community that we'd be asking you some questions. We had an absolutely overwhelming response. We had thousands of response, Kathy. It was I believe it was our best campaign response from our community.
Oh, wow. I'm really excited. And you've built such an amazing community throughout the world. So that's fantastic. Thank you.
It's great. It's, you can be trading NVIDIA in Minnesota and talk to someone in Tokyo and see what their view is and where their exit points and entry points and discussion. So it's kind of it's like globalization of
getting much smaller. Yes.
I think also for the retail investor, they tend to lose money because of bad risk discipline, loss aversion, all those heuristics.
Yes.
And I think having a community, you're not trading alone anymore. And that's one of the moomoo things. You're not trading alone.
No,
you're trading and sending out your ideas to a community, getting feedback. And I think it helps people not take profits too quickly, which is obviously a human heuristic for retail investors, and it helps them formulate longer-term conviction views, I think.
Yeah, I think you're doing the community, the broad global community, a great service. We couldn't believe ourselves in the early days of ARK, and especially around COVID, how our brand went global because we were sharing our research. We were willing to take questions. We were trying to engage with our investors as much as possible, especially during the dark days before COVID and in the bear market in 22. So we are there for our investors, and I think that's really important, that your investors are there for each other. So really, really strong community.
One of the questions I had, I'm a big fan, and if I think about other visionary investors, so think about Warren Buffett, he built his career and his reputation in the days where you weren't marked to market every tick.
Right.
You didn't have social media. I think my grandfather probably found out his investment performance once a quarter in the Gentleman's Club when he met his broker.
Yes.
So I think advice for our community, you're obviously someone who has strong convictions, but you built your brand and your reputation in a time where social media, where everyone has a view, Kathy.
Yes.
Everyone's marked to market on a second-by-second basis. Yes. What advice would you give for our investors when they have a strong conviction view to kind of do what you've done and hold fast and look long-term and not be impacted by the daily or intraday noise that you get with social media and with information?
Yeah, I think one of the reasons we give our research away is we want our clients to understand why we own stocks. And our starting point in terms of research is from the top down, trying to figure out how big is the market that robotics or energy storage or artificial intelligence, blockchain technology, multi-omic sequencing, how big are those markets? How quickly are they going to evolve? And how are they valued in the marketplace now? Is there too much optimism? Or, as is the case now, we believe, there's not enough of an understanding of how quickly these technologies are going to evolve and how quickly the market is going to broaden out from just the Mag 6, which became so popular in the last few years. There are so many innovative companies out there, and they've been neglected because of this chase for safety, rush into safety, which many people think is defined by the Mag 6 with huge hordes of cash. That left a lot of companies behind, and now we think the market is broadening out and that they will be rewarded. And the other thing in terms of advice that you can see that we do it with our own portfolios. When we move into a period of turmoil, like August of this year when the yen carry trade was unwinding, what we will tend to do during those periods is consolidate towards our highest conviction names. So as we do our research, our conviction in names increases or decreases. And it's during those periods of consolidation that we really express those points of view. So I think you do have to cut losses if conviction goes down enough. And we certainly use those periods to do that.
So do you think some of the opportunities with this new administration, I've seen you speak previously about the impact on regulation and how over-regulation has really held certain sectors and companies and businesses back. So with this new administration, what do you think the impact and which sector regulations are you looking forward to the change in the most?
Well, one is very broad-based, and that is a reopening of the M&A market, mergers and acquisitions. With the FTC that we've had in the last 4 years, they really clamped down on M&A, even between companies that had very little competitive overlap, which was quite surprising. And, you know, in our case, our companies are very interesting strategically to other companies, but we haven't had any price discovery.
Right.
What is, how much value would this strategic buyer, how much would that company pay for one of our companies? That information we've not had. We think that is going to change radically. Now, we don't want our companies necessarily to be acquired. We want the information out there, though, about how much they're really worth, how strategically important they are. As you can tell, since the election, the stock market has gone up, and we do think there are a number of reasons, again, feeding into the last answer. Certainly deregulation. I mean, in his first term, President Trump basically said to the government sector, okay, if you want to put in a new regulation, you have to take away 2 regulations. Now what he's saying, his plan is if you, government agency, want to put in another regulation, you have to take away 10. And so areas like drone technology, it's been held back by the FAA, and now we're seeing a little more give. Why? Because regulations in the rest of the world are more friendly to drone technology, and we risk falling behind. Same thing with blockchain technology. The SEC under Chairman Gensler almost shut down the industry in the U.S., and a lot of talent moved abroad. Now it's coming back.
Thank you. So we have just some questions, some more general questions from our communities. What are your viewpoints on the market and the tech sector and hot stocks, which are very big with our community, which is obviously Tesla and NVIDIA?
In terms of this next year, the exciting stocks, consider the source. We think Tesla is going to be analyzed more correctly, shall I say, in that it is not just an electric vehicle manufacturer. It is an autonomous mobility play. It is the convergence among robotics, autonomous vehicles are robots, energy storage, they will be electric, and AI, they'll be powered by AI. It is probably the consummate convergence play out there. It's a very big idea. The Tesla story is not just about autonomy, but also humanoid robots and Optimus. So, you know, I think many people understand electric vehicles. Some understand the impact of autonomous mobility. Very few understand humanoid robots, Optimus. This Elon Musk himself thinks could be worth 3 times what the autonomous mobility opportunity is. And we have done the top-down analysis on this. If you look in the industrial world, we think that the opportunity, the total available market in terms of revenues, is $12.5 trillion. That's in the industrial world. If you look at the home market, wouldn't it be nice to have a humanoid robot doing all of our housework?
It would make my weekends easier because I wouldn't have to do it, Kathy.
There you go. That also is a $12.5 trillion market. So think about it, a $25 trillion market. That's huge. Whereas the revenue opportunity for autonomous mobility globally, we think is in the $8 to $10 trillion range. So we agree with Elon Musk on that. It's just the humanoid robot opportunity, and it is in its infancy right now. But we think it's going to happen very quickly when it happens. NVIDIA, you mentioned, we own it in some of our strategies, not all. We think there's a lot of good news, and there should be, in NVIDIA. And we think it will do well over the long term. Will it do as well as some of the other stocks in our portfolio? No. We think that there are a lot of high expectations, and there should be. I'm not saying it's wrong. But a lot of that is priced into the stock. And if NVIDIA is worth $3.5 trillion, moving towards $4 trillion, the most valuable company in the world, then it must have produced in its chips something of very high value to other companies. Certainly the cloud companies are big beneficiaries. So that fits into Mag 6, the cloud providers, Amazon and Meta platforms in particular. We think Google might be challenged a bit in its search business. So we are basically saying be careful on Mag 6. Some are really going to be in a very good place. Others might be disrupted themselves. We'd put Google and maybe Apple in that category.
Yeah, I mean, if I look at my teenage children, Kathy, they use ChatGPT, Perplexity, as their default search engine.
Absolutely. Yeah. Who has any time to, experiment with links? I've always hated Google's search. I've hated it mostly because we use it for research, and we end up going down all kinds of rabbit holes. Now, if we ask ChatGPT or Perplexity or Claude, we will ask a question and we get answers. And we'll ask for a variety of possibilities in the answers, and it takes us there very quickly instead of link by link, which is laborious and often leads to dead ends. So absolutely, we agree. I would say one of the stocks that we think, or companies that we think is a huge beneficiary of AI and still is valued nowhere near an NVIDIA is Palantir. Because what I find interesting about Palantir, it will go into companies and say, you don't have to rip and replace any of your old software, your ERP software, your financial or human services software. You don't have to rip any of that out. We'll sit on top. And then as time goes on, we will help you migrate to more efficient ways with AI of doing ERP and HR. So its market value is around $150 billion. Alex Karp believes that Palantir will be, he's the CEO, will be the largest pure-play AI software company in the world. And we wouldn't be surprised because it is certainly the biggest bridge to the new AI world, if not one of the purest play AI software companies longer run.
And it also has that kind of surety of earnings given its number of government contracts.
And it has just gotten a designation from the government for all of government to use it, whereas it had been mostly Department of Defense, National Security, which tells you something. That part of the government needs to adjust to new technologies very rapidly. And clearly they like what they see. So we're pretty excited. It's an expensive stock. And you do have to pick your spots if you're focused on the very near term. But in terms of long term, which is what ARK is all about, we think it's in a beautiful position.
So you did touch on digital assets, on crypto and blockchain for the,
Yes.
we're going through a phase now where a lot of the rally, I think, was, it's really regulatory de-risking in
Yes.
the US for institutions. I know that you were the first publicly traded asset manager 2015 to
Yes.
be to be a holder of Bitcoin down at 250, I believe.
Yes,
Kathy?
thank you,
Well
Neil.
Going forward, what's obviously one of the big questions is, what's your view the next sort of 5 years? Where can Bitcoin go to? And your general view of the blockchain and of other maybe layer 1, layer 2 coins.
Sure. Yes, and we have 4 analysts on our crypto team. And even before there was any way to invest in Bitcoin or other digital assets, we had analysts because we thought this was going to be a very big opportunity. It's the layer of the internet that developers in the early 90s did not build because no one understood that financial services and commerce would take place. I know that's hard to understand now, but nobody understood back then that this was going to become a very important way to do business. So we think that here at 90 some odd thousand, Bitcoin is better understood now, certainly than it was at $250, but has a long way to go because with the approval by the SEC, it was kicking and screaming, but they did approve 6 spot Bitcoin ETFs. That's really the first time institutions could legitimately buy into crypto assets without worrying about the regulators coming in and examining them for doing something too risky. So now we believe the next move in Bitcoin and other digital assets is around this idea that Bitcoin and alternative assets in the space are a new asset class. This is a new asset class. It does not behave like other asset classes. And institutional investors have a fiduciary responsibility, if there is a new asset class, at least to examine it, do the research. And as they do that, I think they'll understand that this is a very big idea. We've got 3 big ideas in one. We've got a global monetary system. That's Bitcoin. It's rules-based. It's what we've been waiting for, according to my professor and friend and advisor, Art Laffer, since the U.S. closed the gold window in 1971.
Oh, the Bretton Woods.
The Bretton Woods, right. Pretty much the end of that. So that's the monetary system. Then we have, with Ether and Solana, we have smart contracts and, DeFi, which, we're trying to diffuse the mystery here. DeFi sounds defiant, and so we're saying either decentralized financial services or the Internet Financial System, IFS, or, and I heard this first in India, the Finternet. The Finternet, that helps people understand this should not be foreign to you. This is the next wave of the Internet revolution. And we think Ether and Solana certainly play into that. And Ether, there's a lot of controversy around that. And I think it's because its layer 2s are taking off, Optimism, Arbitrum, and others, which we think is a good thing for Ether, building applications on top of the base layer. We think that's good and validates the base layer. Whereas Solana is basically layer 1, and many people are focused, of course, on speed and complexity. And so there are different use cases for each, just as there are for Bitcoin. And then the third revolution which is what we call the digital property rights revolution. This is property rights moving from the physical world to the online world in a way that many people in my generation are having trouble understanding because they do not spend as much time online, nor do they seek their social status online, except maybe through Instagram and the great party they just went to, but in a different way, actually owning, Gucci skins, shoes, or handbags, only one, it is mine. That is conferring social status now to younger people online. And that is a big idea. Of course, NFTs were the earliest manifestations of it. But we think whether you call it Web3, metaverse, digital property assets, it also is a big idea. It's just the youngest and most volatile.
Understood. Thank you. As you always advocate for technology and innovations, what are your investment in the tech and AI space?
Well, again, you have to consider the source. We devote ourselves exclusively to technologically enabled disruptive innovation. When we are thinking about artificial intelligence, it is going to impact all companies profoundly. It has the potential if they harness the tools aggressively. And if they have proprietary data. And I think in healthcare, people are going to be very surprised at how many AI applications there are. And as I mentioned, we have the 5 platforms. The one that I think is most underestimated, misunderstood, inefficiently priced in the market is within we call it multiomics sequencing. So it's DNA, RNA, proteins, metabolics. It's complicated, of course. But it's really the application of AI using the data coming out of these sequencing technologies is going to transform healthcare. And there are companies like Recursion Pharmaceuticals which are designing with AI drug trials. They're identifying targets and then planning the trials. So they're reducing the failure rate of trials, which is very high. So anything we can do to reduce, I think it's something like 90% fail, 80, 90%. So reducing that failure rate and shortening the time between, research and development and final product. That's Recursion. There's another company named Tempus AI, which is using data not just from the sequencing technologies, but also from electronic health records of all kinds, written and otherwise. Now that we're moving into multimodal AI, that means images, it means text, it means video, it means even audio if a doctor has transcribed, a prognosis. So it is using all of that as well as wearables, which monitor the body, anyone's health, putting all of that together and is able to diagnose disease before we see any symptoms. So I think that's a very interesting opportunity. And they're just beginning to gather some momentum now that we're moving into a different regulatory regime, I think.
Great, thank you. Really one last question here. What are your plans to work with moomoo globally?
Yes, we have big plans. moomoo thinks in a very big way, and so does ARK. And both of our brands are global. So we're very excited about continuing to host our ETFs on your platform.
The Big Five.
The Big Five. They are on your platform. So it would be, I think, a very interesting portfolio offering for moomoo.
I'd just like to say it's been an absolute privilege and an honor to spend time with you today. Your answers have been fascinating. It will be digested by the moomoo community. I'm sure we'll get lots of feedback from this discussion.
Wonderful, and we're very excited to be working with your clients. They're, as I said, they have the right DNA, and so really looking forward to doing more of these videos for moomoo and with you, Neil.
Kathy Woods, thank you so much. It's been my pleasure.
Thank you, Neil.